All right, that is the closing bell on Wall Street. Now we got market domination overtime. We're giving you full coverage of all the moves to get you to the speed on the action from today's trade. Yahoo Finance's Vero Jared Blickery joining us now with the latest market action. Jared.
Thank you, Josh. Just looking at a photo finish in the Dow, and it looks like it resolved to the downside. So down about 16 points or just 4 basis points. And we had some green, we had some red, just ended up slightly in the red. Not the biggest deal. In the NASDAQ, managed to tack on gains of about 0.5%. S&P 500 just a little bit under that. Russell 2000 stole the show once again. Another record closing high for the small cap index. Has not been able to do that for, well, at least some of the majors have not been able to do that since we saw that announcement by President Trump last Friday. But let's switch into sector land, where we have real estate claiming the top spot, up almost 1.5%, followed by utilities, then tech and communication services. So call it, well, that's an interesting trade. It might be a little AI in there mixed with some other things, but nevertheless, we got 4 outperformers. And then to the downside, the cyclical trade, materials and industrials not doing well today, and then energy and financials just barely finishing to the downside. And then in the NASDAQ 100, we've got some outsized dark green performance from Broadcom and Alphabet, each of those up more than 2%. Tesla and Meta up more than 1%. A little bit of red for Amazon, Nvidia, and Microsoft, not a lot there. And for the most part, a lot more green than red in the NASDAQ. Then in the Dow, also seeing some red here, but some outsized performance by staples. Look at Walmart, and then also some of the big banks doing well. JP Morgan up over 1%, Cisco up over 1%, so is IBM, Caterpillar, that trade doing well. And then in transports, stuff that's shipping the stuff that the industrials make, seeing American Airlines up 2.5%, and not a lot of outperformance there, but we'll note that Uber, the biggest one in the index, up about 0.3% today. I did not show you China earlier, so I want to correct that and show you that we did see a lot of green here. Looks like TME up 2%, EDU up 10%. That's New Oriental Education and Technology. Interesting to see some of those names bounce back after last Friday's drubbing. And then I showed you the big banks versus the regionals. So we do have some red here, but seeing some nice gains from Morgan Stanley and Bank of America, each finishing up more than 4%. And then contrast that with the regionals, a lot of downside there, and we're going to see a lot of those earnings pouring in over the next few days, Josh.
All right, thank you, Jared. Appreciate it. Well, U.S.-China trade flare-ups and increased bets for a Fed rate cut have sent gold prices soaring. Precious metal trading above 4,200. Blue Line Futures. Phil Struble joined us to weigh in on the next moves. Phil, great to see you on set, especially my friend. Let me ask you this big picture question. I want to start U.S.-China trade tensions. They're ratcheting up. You saw Treasury Secretary Bessent, Trade Rep Greer, not happy, Phil, criticizing Beijing, specifically not happy with Beijing's decision to curb exports of rare earths. I'm curious to get your take on how you see that. Specifically, just walk me through as a trader how you're navigating all that.
Well, when you look at the rare earths, you look at these different commodities, and what the commodities do is they fuel defense, energy, AI, and technology. Without these rare earth elements, you're unable to produce any of these things. I Google searched and look at AI and saying, hey, can we survive as a planet without magnets? And that's where a lot of this argument is. If you don't have these magnets, you can't create energy. And without that, you're going to see technological advances just not happen whatsoever. Inside of this studio, there must be thousands of things that are running on these magnets. And that's where the argument lies on us getting these magnets.
Let me switch gears. I want your take on precious metals. Let's talk gold specifically. Here's what B of A says, and obviously it's been a run. It's an 8-week streak of gains for gold. B of A sees the risk of correction near term, Phil. Then they tell clients, though, still further upside in 26. Is that how you see it?
It's the volatility is where they see this possibility for correction. You've got about a $90 average true range, meaning that gold is moving about $900 on the 10-ounce contract per day. So you look at gold's up about 50% year to date. You've got 17% a changeover in ETF flows. So coming in year over year, we're getting much more active in this. What's happening is people with traditional 60-40 portfolios, they've been left in the dust over the past few years. It's important for them to start incorporating slivers of commodities into their portfolio, whether it's gold, oil, Bitcoin. And what it does is it allows them to perform better. So it's the widespread adoption from not only the individual investor, but also central banks continuing to add.
Can I ask you, when you looking at gold, what are the levels you're watching?
So 49.37, that would be the recent swing low that we just saw. That would be a little bit alarming if we break below that level. Realistically, the way this thing is charging higher, Bank of America with a $5,000 price target at the end of 2026, the reality is that we could just get there in several days. If you look back at the breakout, which was September 1st, that was above $3,500, and look where we're at right now, $700 higher within a month and 2 weeks.
Silver, I want your take on that one. Again, B of A, I'll give you a take. They see that when they told clients potentially rising to 65. Is that what you see?
Yeah, the possibility is really there. You've got a number of different dynamics. It's up 70% year to date. The silver market is only, the market cap's about 50 billion. You look at gold, it's 450 billion. So it's 9 times smaller, and that's where the volatility takes place. You've got 5 years of structural supply deficits, meaning the mining supply just isn't there. And you've got the demand constantly increasing, everything from EV, solar. Solar is tapering off a bit, but countries like China are really starting to try and become energy independent, and that's where they need silver and some of these different elements.
So the reasons driving silver higher, different than gold in some respects?
Oh, definitely.
Yeah.
And plus you've got the investor demand that's coming in there. It's that poor man gold mentality. Now it does have the risks, and it does attract the type of person that chases after something like Bitcoin, something like the meme stocks. Silver's the next one. They dream about getting rich on these things. Where the gold market has this structural supply where you have central bank demand adding to that support there. The problem with silver, the only one that I would say, is that you have the possibility where you have substitution risk, where if prices get too high, you produce solar panels, you might start incorporating more of a copper paste or an aluminum paste instead of silver. So it does face that type of risk.
Platinum and palladium, I want your response there too. Macquarie saying, here's their take, PGM prices could see a pullback, they told clients, but they think the dip gets bought. Prices make new highs during Q1. Is that what you see?
Now the problem that occurred was that prices of gold in jewelry and watches, it just became too great. So what happened is in China, they started looking at inexpensive ways to have great jewelry, and they started buying platinum, and that's where you saw that breakout over $1,000 an ounce, and it's really taken off from there. It's up near $1,700. Your level of support's $1,500, and you also have palladium, where getting these things online, getting them out of mines and extracting them, a lot of these countries that do that are using it for negotiations towards different trades and tariffs.
Finally, let's touch on the energy complex. Gasoline prices, we're nearing the $3 threshold as oil prices tumble. I'm just looking at WTI, Phil, 58 and change. Where does it head from here?
This is why we have the afterburners going on in the U.S. equity markets. You've got growth right now. You've got declining inflation with these energy prices coming down, as well as lower agricultural prices. I really believe that they want to see oil in those low to mid 50s. So 55 to 52, I think, would be a great level of support. There's no telling on natural gas, where they've been building these inventories, what the weather is going to bring when it comes to the winter. But we do have ample supplies, and that's why the futures are breaking below $3.
Phil, great to see you. We're lucky to have you on set. Thank you, sir.
Thanks a lot, Josh.
Well, Americans are wondering if they'll be thankful for an end to the government shutdown this Thanksgiving. But for now, standoff still remains in place across party lines. Our Washington correspondent, Ben Werschkul, joining us now with the very latest. Ben.
Hey, Josh. Yeah, this afternoon we did have some news on the shutdown from the court side of things. A lawsuit brought by unions that represent federal workers did offer a preliminary ruling that does put a pause on the layoffs, or in government parlance, reductions in force that the Trump administration is seeking as part of the shutdown. It was a notably pointed ruling. One of the quotes was that the Trump administration has taken advantage of the lapse to assume that all bets are off. This isn't a final ruling. ruling. This is a preliminary ruling while this judge in California decides whether to make this permanent. But it does stop a kind of key pain point that we've been watching in this shutdown. Trump has been clearly using these threats of layoffs as well as the actual layoffs we've seen so far to pressure Democrats. So he doesn't have that on the table. But it comes as both sides remain really kind of staring at each other, locked in it. We had another vote this afternoon in the Senate, exactly the same margins, another failure to reach the 60-vote margin to pass the GOP plan, as both sides, or as Republicans at least say they're not going to negotiate and Republicans are demanding. Overall, the kind of atmosphere here in Washington is of resignation that this is people should settle in for a long shutdown. I wrote today about how the word November keeps appearing both from lawmakers and from analysts as for sort of when we should watch for the end of this shutdown. That's because early pain points haven't proved as painful, and now a lot of those are shifting to the end of the month. Government or military workers or soldiers will continue to get paid until the end of the month for certain. Also, a lot of the healthcare deadlines are in November, early November as well. So a lot of people are sort of settling in for a shutdown that could last for a long time, especially as these rulings kind of lessen the pain in the short term, even as the economic costs build up over the longer term.
All right, keeping you busy. Ben, thank you, sir.
Sure thing.
Coming up, United Airlines shares on the move after reporting third quarter results. We'll bring you the numbers right after the break. Well, United Airlines earnings just crossing the wire. For more, we're bringing in Yahoo Finance's Praz Sumeranian. Praz.
Yeah, Josh, how you doing, man? Yeah, so stock a little bit up higher here in after-hours trading. So we saw a slight revenue miss, $15.2 billion versus $15.28 expected, but an EPS beat of $2.78 versus $2.66. So you'd like to see that. Q4 guidance better than expected at $3 to $3.50 range there, better than the less than $3 that was expected. Full year guidance, we're going to hear more about that on the call apparently. Last quarter they guided to $9 to $11 in EPS for the full year. So what's driving the gains here? It's premium. United said premium cabin revenue rose 6% year over year in Q3. Revenue from basic economy only 4%, and loyalty revenue, that's like your miles and credit cards and all that stuff, up 9%. So that's where their rival Delta saw a lot of growth. So that's sort of where United is leaning in more on. And we also heard about how they're going to be launching their first Starlink-enabled flight was today.
So Praz, you look at the stock, it hadn't done much. I mean, heading into the print, it was up around 5-6% this year. The street, very bullish on this name. I'm just looking at more than 90% of analysts have a buy on this one. This is like NVIDIA-like love for United. On the call, Praz, I'm curious, what are you going to be listening for? What are the trends? What are the themes?
Well, it's funny. I mean, the high buy rating there across the street, but the stock was only up like 6-7% this year, right? So it's not like it's been a high flyer. Maybe they expect more action from the stock. So yeah, we'll hear more about on the call. The manager said they'll mention what their guidance will be for the full year. I think that'll be really important. We want to hear more about Newark, right? So Newark was a huge kind of a disaster for the company earlier in this year in the spring when they had the outages, ATC outages, things like that, staffing shortages. United said they had their best month last month, I believe, at Newark, one of the highest on-time percentages there. So they said that's being repaired, that's being fixed. So we'll hear more if that's actually the case. But also, Josh, we have the government shutdown right now, right? So we've heard of issues in Nashville and Burbank Airport where ATC staffing was short, and that was causing delays. Last week, Delta CEO Ed Bastian told me that they hadn't seen any issues yet, but if the government shutdown extended for a longer period of time, that could be something to be concerned about. So we'll see what Scott Kirby, CEO of United, says about that too.
Thank you, Praz. Appreciate it. Well, Formula One's popularity has exploded in the U.S., and that wave of attention is spilling across the entire motorsport industry. Yahoo Finance's Ali Canal is live at Motorsport Network's Auto Sport Business Exchange event in New York City, where top executives from IndyCar, NASCAR, Formula One, and more are talking about the business.
But the title of this event really stuck out to me: The Rise of Racing in America. And we've been hearing from executives all day, from NASCAR, from Indy 500, from Apple. Eddie Q, who is a senior VP of services at Apple, just spoke Apple is rumored to be purchasing F1 media rights. He did not confirm nor deny that rumor, so we'll have to wait and see there. But in the meantime, I do want to welcome in Mark Miles. He's the CEO of Penske Entertainment, which owns IndyCar and the Indianapolis Motor Speedway. Thank you so much for being here.
Thanks. I don't know if we can hear each other, but it's a pleasure to be
Well,
here.
I think that everyone can hear us, which is great. But I want to start with just the money that's flowing into this sport. We heard from Motorsport CEO Warner Bell to open things up. He said the average value of a sponsorship for the NFL, $745,000. That's a lot. For F1, it's $6 million. Why do you think this is such a lucrative business investment at this point in time? Are we in this juncture moment for the industry?
I think the title of this meeting is spot on. Motorsports is on the rise for lots of reasons. Our total sponsorship in the last 5 years has more than doubled.
Wow.
So I won't give you the average number, but it's going up. And for us, the big challenge is to move from what we call endemic sponsors to more consumer-oriented brands. And our partnership with Fox, where we can package our properties and their media rights or their media benefits, is important to that.
And I want to talk about that partnership a little bit more, because Fox owns a third of Penske Entertainment, and this is a very unique deal. Why go that route, and how has it been so far?
I'll do it backwards. It's been phenomenal. Roger Penske was not looking to sell stock. He owned 100% of the stock, happy with that, doesn't need the money. But we had a great start to our media relationship with Fox, where they showed they're completely dedicated, very creative, and committed to growing our property. So when they came forward and said, any chance we could talk about buying some equity, it was a quick, yeah, let's talk about it, and then even quicker, getting the deal done. It happened because we trust them, because they'd proven their capabilities, and to have them right there looking at how to grow the value of the company in the long haul is phenomenal. They are lots of things, but fundamentally they're marketers. And great leagues have to be marketers from the time we get up in the morning until we go to bed. So their influence, beyond what you see on television, their influence in all of our discussions about all of our decisions is really very helpful.
And you talked about this partnership and the panel that you were just on, and what stuck out to me is you said this is important because audiences know where to go to watch. And even anecdotally, when I watch the NFL, there's a lot of different places you can watch a singular game, whether it be on streaming or network television. You have multiple networks at play. So talk to me about that singularity element and how that gives you an advantage, especially to those younger consumers.
We thought it was huge for us to know that every race will be on live on Fox Network, which is available everywhere, is huge. It's appointment viewing. The fan or the person we're going to make a fan knows where to look and how to watch us, and they can get it. So it's simple, it's not complicated, but it's more than that as well. It's not just that we're really the only U.S. sport with an all-network audience.
Yeah.
That's why we grew 27% in the average number of people watching us this year. It's also then that they get completely committed to creative ways to promote us. So they've got, football talent talking about IndyCar and at our races. Gronkowski was the host of our Snake Pit EDM festival at the 500 in the middle of the track. It's the crossover benefits, the spots they created to introduce or reintroduce some of our best, most appealing drivers publicly, which they ran during the Super Bowl, are just evidence that it's a broad relationship.
Right, it's that financial stake in the league, really, which is really a vote of confidence in the league and the sustainability of it.
I think you're right.
And we have seen it in other types of deals, ESPN taking a 10% stake in the NFL. Do you think this is going to maybe be the new structure moving forward when it comes to sports rights, especially since sports seems to be the one thing that's tethering people to that network television viewership?
Yeah, I think it's happening all over. There are a lot of assets chasing sports, not just media assets, but it makes sense for them. They can help us grow and they can capitalize on their own work over time, if and when they ever decided to exit. It makes all kinds of sense to us.
And talk to me about your audience. We've been hearing that a lot more women are watching these sports, a lot of younger viewers as well. Who is your audience and what's the demographic like?
It used to be a little older, a little bit more like me, and it's become much more diverse and much more young. So we almost doubled the 18 to 34 demo on our live broadcast from 24 to 25. I expect that to continue. And by the way, that bucked conventional wisdom. People said to us, well, you can go on a network, but network television is an older audience, and that doesn't bode well for your future growth. The opposite was true. It had a big impact. And again, and it's not just the live broadcast, it's all they do digitally, and they're really good at reaching people. And I think the way they approach the production, what you see when you watch the show, with more technology, more drones, young presenters that before the race starts are dressed cool and don't look like me. Yeah, they're really hitting it on all cylinders, and I think that trend of going younger and more diverse will continue.
And finally, Mark, IndyCar is a homegrown American company, right? But F1 has really just exploded in terms of that global presence. What can you learn from F1, and how can you maybe carve your own lane there?
I got to make a self-serving comment first. We still have significantly larger audiences in the U.S. than Formula One does.
Right.
But God bless them, they're a potent brand, and they've had great growth, especially outside the U.S. I think we have an opportunity. More than half of our drivers are not Americans, they're from other countries. We decided to end our championship, our season, right when the NFL season starts, so we don't compete with the NFL directly. And that means we got a long off season. That means there's international opportunities, so stay tuned.
All right, stay tuned. Mark Miles, thank you so much. Josh, sending it back to you.
Thank you, Allie. Time now for To Watch Thursday, October 16th. We're going to start off on the earnings front. Earnings season in full swing here. We're going to be getting reports on Thursday from more banks and as well as Taiwan Semiconductor. Taiwan Semi announcing results for the third quarter. Analysts expecting TSMC to post a strong quarter, making about $33 billion in sales, driven by huge demand for AI chips and Apple's iPhone chips. And taking a look over at the Federal Reserve, another big batch of Fed commentary is coming our way on Thursday, including Fed Governor Stephen Miron. This is coming after comments from Miron on Wednesday. Miron saying he sees China trade tensions as another potential reason for interest rate cuts. And moving over to housing, we're going to be getting some fresh data on Thursday, including homebuilder confidence. Economists forecasting that number to climb to 33 in October, signaling that builders are feeling slightly more optimistic about housing market conditions than they were in the previous month, but that conditions are still weak overall. Well, that's going to do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell. But don't go anywhere. On the other side of the break, it's asking for a trend, and I've got you covered for the next half hour with the latest and greatest market room stories.